The following segment is sponsored by Segelke Financial Group. Back with us today is one of our favorites from Segelke Financial Group, Jeff Segelke. We just call you the Selk. Is that good?
That's fine.
Okay,
yes,
good.
I'll accept it.
You're a financial expert and president of the Segelke Financial Group. Okay, Jeff, we hear a lot about that we need to invest, we need to get going as we're younger instead of waiting till we're older, but what and where do we invest?
Yeah, so depending on the phase of life you're in, your age, and what you're doing as far as working or retired, things like that, that makes a difference on how you should be investing, where you should be investing. There's all sorts of different financial vehicles out there. Everything from bank products, savings accounts, money market accounts, CDs, to investment products like mutual funds, stocks, bonds, real estate investment trust. There's so many different financial vehicles. Annuities. There's lots of different vehicles out there.
Okay, let's start with our 20s. When we're in our 20s, what should we and where should we invest?
So in your 20s, you're probably, just maybe out of school, starting your career. One thing you'd want to focus on is paying down debt. If you have some maybe student loans, other debts, kind of paying that down. You might be looking to save up for your first-time home purchase, things like that. So that you might just use a bank account for that to save up for a first-time home purchase if it's coming up in the next couple of years.
Okay.
But if you're looking more long-term, that's where you may want to use maybe mutual funds or different types of investments that can earn potentially better returns over time.
Okay.
So that's something to look at. Also, if your company has a 401k plan or some kind of retirement plan, you may want to contribute to that because if they're matching, that's free money.
Is that a good thing to do then? If they match it, you want to do it?
It's a great thing, yeah. Because if you think about it, if your company matches, if you put in 3% and they match maybe let's say 3%, that's 3% bonus of your income that's going into your retirement account from your company. So that's a great thing. You want to take advantage of that.
Okay, what about in our 30s? What should we do then?
So in your 30s, now you're probably looking more long-term. Maybe you're starting to look towards retirement a little bit more. Again, saving in your company-sponsored retirement plan or in a personal IRA or 401k. There's Roth IRAs. Roths are great, and I love Roths because, especially when you're younger, what a Roth is, it allows you to put money in after tax, so you don't save any taxes putting the money in, but you get to pull it out tax-free in retirement.
Which is nice because a lot of stuff is taxed when you pull.
That's right. A lot of stuff is going to be taxed when you pull it out in retirement.
So Roth, R-O-T-H, that's a good one.
So that's a good one. Another thing you should be thinking about, as you get in your 40s, 50s, and then 60s, we need to determine, and today, many people are asking me, hey, should I be invested in stocks or bonds? Stocks are risky, bonds are a little bit safer, but they're not yielding as much. We've been able to put together with bonds a great bond portfolio that's yielding about 4% right now, which doesn't sound too exciting, but for somebody who has several $100,000 sitting at the bank or in their retirement accounts and they don't want to take a lot of risk, getting a 4% return is actually a good return. And especially if you're retired, let's say you've got $1 million, if you can get 4% a year, that's $40,000 a year of income to live on.
Hey, I'll take it.
On top of Social Security and other sources. So there are some really good things that we can do with bonds if you're looking for safety. If you're okay with risk, there's some great things we can do with stocks. And as you have more money, you want to get out of mutual funds and be more in individual stocks and ETFs, exchange traded funds. And the reason being is they're lower fees compared to mutual funds. Mutual funds have a lot of hidden fees inside of them. So what we do with our clients is try to help them figure out, based on where you're at in your life, what should you be invested in and how should we do that?
Well, if you have no idea what you're doing like me, can we come into you, can we have a conversation a little bit more personal, ask questions for a consultation?
Definitely, and that's something we're offering today for Fresh Living viewers is just give us a call. If you give us a call, we can set up a time for a free consultation, talk about your situation, your goals, your retirement assets and savings, and figure out where should your money be. The other thing you can do is if the first 20 people that call are going to get a free guide on investing that I've put together.
Great. Okay, Jeff, where do we go?
You can visit us at protectandgrowwealth.com or give us a call and we'll help you out.
Perfect. Jeff, thanks so much.
Thank you.